Happy New Year. Welcome back to another Tech Talk from MarketEdge.com. My name is Rachel, and with me today is David Blake, CMT, here to tell you about what happened in the market last week and what to keep an eye on as we move into the next trading week. David, how are you today?
Oh, well, good to be back.
Great. All right, let's dive right in.
Okay, well, we haven't done one of these for 2 weeks, mainly because there wasn't much action going on. We had the 2 short weeks here, and it's a pretty slow holiday period. We were coming in, we started out the week before, started with a little bit of a Santa Claus rally, and everybody kind of got excited, and then things just kind of rolled over. We had the FOMC meeting minutes came out and basically said that the committee's not in any hurry to cut rates in early 2026. I think right now the earliest they're looking at is around April, unless inflation would come down quite a bit. So we'll have to see how that goes. And then on Friday, the Dow Jones and I think the S&P 500 were on 4-day losing streaks. And then we got that nice bounce mainly from semiconductors, which jumped about 4% on the day. But anyway, the Treasury yields right now in the 10-year is up around 4.194. That's above where we were back in September when they started the 3 rate cuts, and especially with small caps, which are the big beneficiary of lower yields. That's just has been putting a damper on the Russell 2000, especially, and also on the broader market. It just kind of gets up there, and we're seeing this rotation into more cyclical areas of the market, financials and industrials and all. And we actually saw a breakout that we talked about a couple of weeks ago of the Dow Jones Transportation Index, which had a big breakout out of about a 8 or 9 month consolidation period. So there are some good things underneath going on. On Friday, we had that big surge in semiconductors, and I'm talking moves like 10% in Micron. Intel was up about 10%. Lam Research was a leader. Advanced Micro Devices. And on Friday alone, the Philly Semiconductor Index was up 4% on the day. And today, as we come in here today, we're having another big surge in semiconductors with the AI people coming back with it. What worked last year is going to work this year. And we're seeing AI stocks going up and the semiconductors. Yeah, it looks like it's up another 3.5%, 4% today. So again, they're just flying through here, just buying all they can on the semiconductors, which is an area that, of course, is going to keep on going as they talk about these AI build-outs are going to use hundreds of thousands of new chips to power them. So that's something we want to keep an eye on. But anyway, so after that, I talked on Friday that the actual Santa rally actually had today to go before it was going to be over. This was the last chance we had of that. And actually, Santa may have been asleep for a while, but we had the Dow Jones up about 750 points as we have this. It's making new highs. We had the advanced decline line on the NYSE making a new high today. The 52-week new highs on the NASDAQ were negative last week. In fact, we had 521 new 52-week lows to only 224 new highs. But then today we have 250 new highs on the NASDAQ new high list. So that's something to watch. Now, we did see some deterioration in the major averages last week. Not a lot, just kind of coming back. The NASDAQ at one point tested its 50-day moving average, dipped below it momentarily, and came back up, I think, on Friday. Actually, it stopped on Friday. It closed for the weekend right on that 50-day moving average. But today we're way ahead of it. That's where the NASDAQ's up 200 or some points. So no problem there. The Russell 2000 was also flirting with its 50-day moving average before getting a lift on Friday, and it underperformed on the week. But yeah, nothing too bad. If you look at the charts on them, they were a little bit of in a sideways motion. We were just, like I say, a lot of people were just hoping that we were going to get that Santa rally that I guess we'll call it mixed, since we are probably going to finish up today by quite a bit and make it positive. Now, one thing I did point out that while we were kind of rolling over here and seeing some rotation out of the big tech stocks, the VIX, which is the volatility index, which you kind of watch to see how the traders are looking at the market going forward, 2 weeks or 3 weeks. When it starts to go up, that means they're getting a little bit more nervous. But the VIX fell to its lowest level since December 2024 at 1347 the week before. So that was a sign that the traders aren't really that worried about coming into the new year and seeing a big sell-off. So when you see something like that and you see the market struggling with some volatility, normally you're going to see traders buy the dips. And that's what's been happening every time this thing starts to roll over a little bit. One thing I did bring up about investor sentiment on Friday, because we are getting a little bit overly bullish coming into this. Now we had the MarketEdge sentiment index reached -7, which again is the worst level that we've seen since December 2024. Everyone's bullish. The retail investors, the bulls rose to 42%. That's above their historical average of 37.5%. The hedge funds with the National Association of Active Investment Managers Exposure Index is up above 90% for a fifth consecutive week. That means they're basically fully invested in equities. In fact, they were on margin about 2 weeks ago. So you talk about back in the 90s, Fed Chair Alan Greenspan talked about irrational exuberance going into when that stuff was starting to pick up. And we're not there yet, but it is something that you may want to, you just have to know that if everybody's already bullish, it means they're probably already in the market. And you look at that stuff kind of as a contrarian indicator rather than, hey, everyone's bullish. Let's all jump in. What was it? Warren Buffett used to say, get fearful when everyone's bullish and get bullish when everyone's fearful. And that's why we're going to see kind of a choppy market going forward. Now, there's one other thing that besides the Santa rally, they have first 5 days effect of January. That's an old Wall Street thing they look at. And that is if we're up for the first 5 days of January, that normally means you're going to have an up market. They also have follow that up with the January effect, which means if January, the whole month's up, means you're going to have another up year. Now, actually, one thing I talked about the last 2 weeks on Bloomberg, every Wall Street analyst right now is predicting a fourth year of market gains. I mean, every one of them. They followed 21 of them. That's what they have, and all of them are looking for gains for this year. And if we have a fourth year of that, that'll be the longest win streak in nearly 20 years. So again, you're starting to look at this stuff. You want to be a little bit contrarian and not just throw everything in, because if everybody's in, everything starts to roll over a little bit, you might see a little bit of panic selling coming in. Okay, so coming into today to start the new week, this will be a full week of trading. And of course, if you look at the market over the weekend, we had Maduro get captured and everyone wasn't sure how the market was going to react, but you've had rallies around the globe. Europe was up strong. We're up strong today, especially the Dow. And that's because you're starting to see a lot of the oil stocks, which are heavily in the Dow with Chevron. And they're talking about getting this oil out. And you're also seeing a lot of rotation into like steel and the base metals, that type of thing. You're also seeing another big rebound in silver and gold and copper, that kind of thing. That's because when they start invading these countries, it kind of makes people a little bit nervous, and they want to make sure they have some safe assets, and just in case something starts to turn over. Now, I did want to talk a little bit about oil, and we're going to go to the charts over here and look at some things. Now, I'm not an oil man, obviously, but one thing about oil that comes out of the land in Venezuela is a very, very thick oil. It needs to be refined quite a bit. And if you go over to Saudi Arabia, you can almost take the oil out of the ground there and put it in the car and run it. It's so clean, it's so light. So this is going to require, if we go in there and the American companies start to pull this oil out of the ground, it's going to be going to the refinery stocks. That's probably where you're going to see the biggest moves. And the two biggest ones of those are Halliburton and SLB, which used to be Schlumberger. So we're going to take a look at a couple of things here. Here's Halliburton. You can see it's been moving up here a little bit as we go on. It's making it its highest level since January today. I think it's up about 9 or 10%. SLB was another one, the Schlumberger. It was up 10 or 11% earlier. And again, that's because all that oil, they're going to have to go in there and build some big refineries, which is going to give them an awful lot of business for that stuff to be more valuable. And with that heavy oil, you get a lot of blacktop, that type of stuff, tires, things like that. That's where they're really going to be able to get right to work with that stuff. But anyway, there's a couple of things that you can look at. Obviously, XLE has underperformed for most of the year. If we take a look at this, you can see you got a market here that's up 27%. And since January, it's been trading basically between about, say, 40, 42, and then up here to around 47. That's not much volatility. That's obviously dropped back in here. I want to show you, if we go back to further, This looks even worse. Now, this is going back to 22. If you've been in energy stocks, if you got lucky enough to get it down here at the bottom, you got here at 39, and maybe you're up here around 47. You haven't had much success in the market. So this XLE, which is the energy sector ETF, has really underperformed. I think right now, what I was looking at here earlier, if it gets above 47, and to right now, I think we're at 46.80 or something like that, you're going to get a double top breakout on the point and figure chart, which is a pretty bullish move. And then if we can get above, let's say right around, I would say if it got above 50, which is right around here, you're probably going to see another big move, and you're probably going to see a lot more buyers come in there, and that would be a spread quadruple top point and figure top breakout, which is something that is fairly rare. But this just means that you're probably going to see this XLE break out a little bit more. Now, if you're an older guy in the market, that XLE pays a pretty nice dividend of 3.5%. Another thing I looked at is something called PXJ. It's been kind of moving up here as we go. It's up another 3 or 4% today, so it's trading up here around 31, 32 or something like that. It's going to probably break out of a point and figure chart too. This is the oil and gas services ETF, which means that these are the people that are going to help get the stuff out of the ground. These are the people that are going to help refine the oil and that type of thing. Now, the only thing I don't like about this is it doesn't have the volume that the XLE has. The dividend on this is, I believe, about 2.71, which is fine. But we're getting ready to break out above the 50-day moving average, which it actually did on Friday, as you can see over here. It's kind of funny that all these oil stocks on Friday had some pretty big moves. And not like anybody knew this was going to happen over the weekend. But anyway, they started to move Friday afternoon. And then, like I said, on this PXJ, you have Halliburton is one of the bigger positions. It makes up about 6 or 7%. And so does Schlumberger. Then you have WFRD, which is another oil producer that is in their rig, which has the ships that ship this stuff out. That's one to take a look at. Just if you want to diversify a little bit more and go in towards a refinery, that would be one that we could take a look at. And then finally, if you're talking about all this oil's coming around, what should I do with oil? It's up a little bit today. If you look at the United States Oil Fund, I have to tell you, this is still something that I don't think you want to buy this yet. Here's a trend line. You can come in on our charts. You can go down through here. You've got some work to do. This is not a chart that you want to go, oh boy, we need to buy this thing. This is working lower. This still looks like it could go down in here to this level, back where we saw the lows in here. So I would not be buying oil itself because we're thinking, okay, there's going to be a lot of oil here that we can buy, because number one, you're probably going to have more oil on the market, and we're already heavy on the stockpiles. So I don't think you want to buy oil itself, but you do want to look at the XLE and the PXJ, where you can get into the oil and gas services industry. And that's going to, I think, be your best bet, and also give you a pretty nice dividend to boot on that. And finally, one that I wanted to take a look at, this is DBB. Okay, this is another ETF. It's a base metals ETF. And now this is the kind of stock chart that you want to buy. Okay, it hasn't had a great big move yet. Just over the last couple months here, we've gone from about 20 to about 23, about 10, 11, 12%, something like that. The dividend on this is 4%. And if we're going to be building new rigs, and especially into the build out in the United States of the infrastructure, that type of thing, this fund here actually buys futures in the commodities. With some of the biggest things are going to be copper, also gold and silver. But with steel, they're buying futures and that kind of stuff. And this would be another one to look at as commodities become more of a part of your portfolio, which in this kind of environment, when you're starting to see the economy starting to maybe go into an expansion with infrastructure and all, this is a kind of stock or player that you want to have exposure to in your portfolio. The reason I brought this up today is just because if you're watching CNBC and all this, you're seeing these big moves and all this stuff. And this will give you a couple ways to go into it without all of a sudden deciding, well, I need to buy Exxon, or I need to buy Chevron. And they're already up, 4 and 5%. And we don't know yet how much for that's going to go up in the short term, because, it's going to take a while for these things to get in there and build out. and we don't know what we're going to find in Venezuela anyway. So these are some things to look at that have to do with the action over the weekend. Again, I still like some of the steel stocks. SLX is one of the ETFs that you can look at in that. Here we go. As you can see, this is another chart. This stuff's just moving up nice and steady. And when you play this stuff with the ETFs, you don't get surprised. You don't have something like you're going along, you're making money. It's a little bit more speculative, but then all of a sudden some news comes out of there, short on their earnings, and all of a sudden you go down 20%. These things will have 10, 20, 30 stocks in them. So if one blows up, you're still fine. And like I say, these are the kind of charts that you're looking for. A nice 45-degree angle slowly over 6-7 months. And that would be the way I would be looking at some of these to play. Also, you can go into your ETFs. If you look at that, just say over the last 1 week, okay, what's outperformed? Here we go. Commodity, base metals. Over the last month, they're up 5%. Last week, they're up 3%. And then they're up again today, and they're 2 or 3%. And lo and behold, here's the XLE. And this is before today. This has been going in here. This is the energy sector, the XLE. And another one that I do like, that I actually bought today myself, EEM, which is the International Emerging Market ETF. You're starting to see more money going into some of the foreign markets. These would be some of the smaller things to look at. So these are some ideas that you may want to look at with this new development with the Venezuela. But, come in here and you can make your own list of different ETFs and put them in a watch list and find out what's been upgraded or downgraded. I usually, when I look at these things, I look at the power rating, find which ones of these have the highest power rating. In this case, we have silver again. Here's platinum. Pharmaceuticals have done well in here, and biotech. But you can go in here and you'll find the ETFs are the sections that are outperforming, and a lot of these will continue to keep going higher as the market starts breaking out here again to new highs. So that's pretty much all I have. I just wanted to touch base with the fact that the Dow's at a brand new high today. I think the S&P 500 may be close to hitting one today. And it looks like we'll probably get a little bit of carryover. You want to see how this plays out over a couple of days. This may just be today, maybe just the initial excitement of what's going on with the oil stocks. And, they're probably going to be overbought after today. Maybe you watch them for a couple of days to see if they maybe pull back a little bit to give you a better entry price. But that's about all I have for today and what we're expecting. Now, the rest of the week, we are going to get some key job and inflation numbers. I think the December PCE, which is the Fed's favorite inflation gauge, will be coming out Thursday or Friday. We also have some updated job numbers, which will be watched also.
Great. Thank you so much, David. Is there anything else we need to be looking for this week?
No, I think that's it. Let's just, like I say, we'll see what this first 5 days of January effect looks good. Right now, that looks good. And just before you jump in here and start buying all this oil stuff, just give it a day or two to play out to see what happens. You don't want to buy something at the top, but then again, if it continues to inch higher, you probably want to have exposure to that. And I would think that the XLE and maybe the PXJ would be two areas, and the DBB, three ETFs that they're going to probably be upgraded here on MarketEdge probably the next day or so to a buy or early entry. And that would be probably the most conservative way for you to get in these things and get a nice payday on your dividends and not have that volatility around what can happen with oil stocks.
Great. Thank you so much, David. We'll keep an eye on those stocks and our watch lists on marketedge.com. If you would like to create a watch list to keep track of all of your stocks and the technical opinions on them, feel free to give marketedge.com a try. Your first 2 weeks are free. And I think that's it. So we'll see you next week. Thanks.